What I love to do is introduce the right people to the right people.
I assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today.
Please give my panel a round of applause. Welcome.
Okay guys, Jay Martin here, CEO of Cambridge House, and I'm joined right now by Lobo Tiggre, the independent speculator. Lobo, I'm so glad you're here. How are you?
I'm great, and I'm happy to see you, and I'm happy to be with you. I remember the old times running around the Vancouver Convention Center at the shows, and it's been a long time, and so much has happened. So I'm glad to have a chance to talk to you.
Yeah, it's been a wild year. It's funny to hear you say that. I was just reminiscing about shows with a previous guest, and I was like, I feel like I got to keep the best part of the conference business, the content. I get to keep the conversations, but I don't have to negotiate with unions anymore, organize caterers, book venues 18 months in advance. I mean, we're going to get back to it. When we do, I'll look forward to it. But truthfully, I've really had an awesome year, and it's been tons of fun. So, and this is why, because I get to get in touch with people like you on a weekly basis, people who have been in the game for way longer than me. I mean, you've been on planes, trains, and automobiles, checking out mining properties since before I was.
Don't forget the mules and the horses and the yaks and everything else.
That's right. Yeah, it's not choppers and limousines. It's yeah, I get it. And yeah, you've been doing this a very long time, and longer than I've been in the business. You've been on the ground kicking rocks, and so that's the benefit to this business for me, and why I love doing it so much. So I'm excited to pick your brain, steal your perspective, share them with my audience, and I think in 30 minutes you're going to make us all better investors. So I'm looking forward to it. And where I want to start, Lobo, is with the gold market. A lot of my audience is quite versed and very intelligent when it comes to precious metals, but not everybody, because I also cover a lot of the innovation sectors. And there's a handful of investors that watch this stuff that maybe until the spring weren't really curious about the precious metals, and they are now. And they had a wild ride from, call it, May through to August, and now they're wondering what the heck's going on. And so I'd love you to share some perspective, and let's just start with that.
Okay. Well, there's so much we could say about that, but if we're going to assume some people new to the space here as well, or that they maybe need more help than the ones who already are up to speed, the first and foremost thing I would say is that I don't think that the peak last year is the peak for this cycle. There's a lot going on. There's a lot of fundamentals. There's a lot of technicals here. It is common in a major bull market in the monetary metals to see a significant correction in the middle of it. I think that's history repeating itself. That's maybe not too confidence inspiring, especially if you bought after the peak last summer. But let me just say that, the kinds of things that caused that peak to happen, really starting with the Powell pivot in late 2018, none of that has changed. All of that is in force and getting bigger or better, even, if you want to say. I mean, just the blue wave in Washington has to be one of the most bullish things that has happened for gold in decades. And we've, got more trillions on the way. I could go many, many leagues down the rabbit hole here. But the bottom line is to reassure people that, I could be wrong, but my view is that this bull market has a long, long way to go. And let me just quickly add, okay, well, that's great. Sounds good. But, why is gold getting whacked around so much? And in particular, if gold is supposed to be this wonderful inflation hedge that it's been for thousands of years, why is all this talk about more inflation suddenly, sending gold prices lower? That seems to make no sense. And there's an article on the website, independentspeculator.com, absolutely free. It's called the Fed is Caught in an Inflationary Death Spiral. And the short answer is gold, more than almost anything else in the world, responds to real interest rates, not nominal rates necessarily, but real interest rates, nominal rates minus CPI. Right now, you've got expectations of higher inflation pushing nominal rates up, and CPI hasn't had a chance to adjust yet. So real rates look less negative, and that's been bearish for gold. Now, if you're not sure what I mean by all that I just said, please read the article. All I'm saying is it's not magical or mysterious. It may seem counterintuitive, but in fact, based on 50 years of information on this market, it actually makes some sense for what's happening now to be happening right now. And last thing, Jay, I'll give you a chance to jump in. I do see that, of course, as an opportunity. If something is on sale for the wrong reason, that's an opportunity.
I'm with you. And so having been through enough cycles, Louis, and by the way, you just released an excellent interview with David Lynn. So to expand on this conversation, check that out over at Kitco, because you guys go in deep and spend about 20 minutes sort of debating exactly what you just said. So we don't have to go down that path. I'll point people there because it's a great conversation. But so talk to me about how you're, personally as an investor approaching this scenario. You got cash on the sidelines. Are you hunting for opportunities right now, Louis? What are you up to?
Very much. Maybe a little bit of an accident here. One thing I got to say is I'm not perfect. I don't claim to be the guru who knows the future. What I say is based on what I have experienced and therefore what I'm doing. So I'm not saying that I know what's going to happen. I'm saying this is what I think and this is what I'm doing, which is exactly what you're asking. So I bring this up because after the crash last March, I saw gold get whacked with everything else. And I thought that was one of these cases where it's on sale for the wrong reasons. And I was right. But I thought that the markets would go down more. I just couldn't believe that after such a shock that Wall Street could recover so quickly and head so higher. So my share of mistakes there. And in terms of gold and metals in general and so on, my big mistake of that thinking the market would head lower was that I could have bought a lot of great stocks in the metals themselves at lower prices in March and April. But since I expected that leg down, I didn't act until more like May. So I still made money last year. I made a lot of money last year, but not as much as I could have if I had acted when I knew that opportunity was there. And I bring this up because expecting another downturn, I piled up a lot of cash and didn't deploy it. And I still have that cash now. So when people say, well, what do you think? And if you're worried about gold in the near term, are you deploying or not? To answer your question, I actually have a bigger war chest going into this year than I expected. So I'm doing both. I see the current relative weakness in gold and silver, though silver less than gold. And that's an interesting topic in itself. As an opportunity as is. I'm buying now. Last week, I bid on a half a dozen stocks and I got filled on 3 of them. I'm really happy. And people say, well, what if it goes lower? Well, I still have plenty of cash. I have this war chest that I say that I built up last year. So if they go lower, I'll buy more. I'm perfectly happy to average down on something I believe in. I'm not a technician. I'm not a technical guy that looks at these charts. And it frustrates me because some of the technical guys are warning, oh, there's no support here, it's going lower. And other technical guys are saying, oh no, this is good support, it's going higher. So I don't know what to make of that. What I do know is that they're putting a ton of money in Washington. The Fed has the lever stuck on easy money, and it says they're not going to change that for years. And I just don't see how that's bad for monetary metals. And I am putting my money where my mouth is now. And if things get cheaper in the near term, I am prepared to average down quite aggressively to make the most of the opportunity I see in this space. Okay. And so just to pull on a thread, you mentioned silver very briefly. I want to go down that path. So best performing commodity in 2020. And actually, the top pick at, I hosted a little event on our YouTube channel in January, and I asked everybody, what are you betting on? You had to pick one, and silver was largely the favorite, not exclusively, but most common. What are your thoughts though, Lobo? The first thing I want to say, and this kind of may seem to go in opposite directions, but they're related, I promise. The first thing I want to say is that it is wrong to think of silver as no longer a monetary metal. There are a lot of people making the case that it's just another industrial metal now. It's used in electronics and the photovoltaics for the solar panels and so on. That's true. But if you look at the charts, if you look at them on a daily basis, on a weekly basis, yearly basis, longer term, silver still moves with gold. Now, very recently, it's been more divergent, and that's an interesting situation. But overall, silver has been an industrial metal all along. This is nothing new. You remember a film when you had film in cameras and you had to have silver for the film. So this is nothing new. It's still a monetary metal. It still responds to monetary phenomenon, fiscal policy, monetary policy. Both gold and silver are still monetary metals. That's a good thing. If you look at all the money printing I'm talking about, that's good for both of them. Right. But then there's also this industrial side. And that seems to be as I say, it's not new. There's always been industrial uses of silver, but there are really important ones. And they're important in some of the big narratives that are gripping investor imaginations this year. We've got the Green New Deal or the green recovery. A big chunk of this trillions in new easy money coming from Washington is meant to focus on this new green infrastructure. And that's specifically bullish for silver, which is used in these solar panels, as well as copper, which I'm very bullish on, the other battery metals. Not all of them. You need to look at the ones that are also looking at supply side issues. But silver has this sort of win-win combo going for it, where it can win based on the monetary and fiscal trends. It can win based on the industrial trends. A big part of which is this new energy paradigm, which just seems to be turbocharging it. And that's why I think we've seen recently a little bit of a divergence. We've seen days where gold goes down and silver actually goes up. That's very rare. The moves generally are in the same direction, not always in the same quantity. Silver's more volatile. But that just, to my mind, tells you how much stronger the silver story that is this year. And we may actually see silver track copper prices more closely this year than gold prices, which would be a real anomaly. But fortunately, that's not a downside. That just means if there's less monetary pressure on gold and silver than I'm expecting, it can still go up based on industrial demand. And if that monetary side that I'm expecting adds to it, well, then it wins even more.
Okay. I want to stick with this theme then. Let's talk copper, and stick with that for now. Maybe nickel. We'll see. But thoughts, Lobo?
Well, those are my two favorite of the new energy paradigm minerals, other than silver itself. Copper, I like and understand a little bit more. The supply side issues there are just baked in the cake. There's somebody, I can't remember the name of the author. Somebody just put out a good copper review on Kitco. Give credit where due. It wasn't my writing. And he talked about this gigantic new copper mine that Friedland's got starting up in the Democratic Republic of the Congo. And if you look at the projections for the electrification of the world over the next few years, we need something like 5 of those every year over the next decade or something. I don't remember exact numbers, but it was really eye-opening numbers. So at the same time, you've got the difficulties in permitting the projects. You've got lowering grades in existing big mines. You've got structural supply issues that just can't be resolved very quickly in our modern world. So I really like copper on this basis. I think nickel is similar, but more complicated. It's and there's also especially on the battery side, it's this apparently the sulfide nickel projects are better for the batteries. And there's a lot of this nickel pig iron coming out of Indonesia and the Philippines, and they seem to be opening up again. So I'm a little less certain about the near-term supply issues in nickel, but both are really essential. Copper more in the cars and gadgets, nickel in the batteries. And by the way, I'm not bullish on lithium. Plenty of lithium around the world. They call these things lithium batteries, but Elon Musk himself says they're really, nickel, manganese, graphite batteries with some lithium. And he's been recently in the press saying that his number one concern is nickel. So I love the copper story just as part of the overall electrification story, on top of just any industrial recovery we get in the post-COVID environment, right? Don't forget, it's Dr. Copper even before all this battery stuff started. Right. And we'll throw nickel in there too. You didn't ask, but let me just throw in this whole energy story. It has these weird sort of side stories with oil on the one hand and uranium and nuclear power on the other.
Sure. Yeah.
Neither of those are the new energy paradigm. But if you have the world coming out of a lockdown and you have people traveling again, that's clearly bullish for oil. And then there's this weird unloved stepchild over here, uranium. I don't know if you want to talk about it or not, but I'm extremely bullish on that because prices remain lower than the average cost of production. It's not substitutable. You can't just put thorium in a current uranium-based nuclear power plant. And even with the new energy paradigm wanting to move away from nuclear, or has been, that takes decades. And a large chunk of the world's power right now requires uranium, which can't be supplied at current prices. So somebody's got to give there.
Okay, so I want to I want to save that thought because I want to talk about uranium. But before we get to that, I want to go back to copper for a second.
Okay.
And what I'd love to hear you speak about, Lobo, is when investors are looking at copper exploration projects and they're approaching it the same as they would approach a gold or a silver project. Often I would caution them and say, look, it's a little bit different, mainly the economics, right? Like the end game is just, it's a narrow funnel. You can, to build a gold mine, a silver mine, or to sell it, you've got quite a few options. There's X amount of dollars required. In the copper business, it's not that way. There's 5 or 6 suitors that might buy you, and it's 10x the money and time. So the chances of getting to production are far slimmer. And so what can you share? And first of all, am I on base or off base on this one? And then secondly,
you're absolutely right. I'm not sure what the question is. I think you've just educated the audience.
Well, I guess then what do you...
Concentration of value in gold, right? You thousands of dollars per ounce instead of, dollars per pound, right? Yeah. So it's possible to get a lot of value out of a much smaller project that's manageable by a small company. So a little junior can discover a gold or silver deposit, build the mine, and become a big successful company, right, on down the road. That really does happen. Not as often as you might like, but it does happen. Yeah. Whereas copper projects, usually these are big, 100 million ton, billion ton projects and billions of dollars in CapEx. And basically, nobody's going to give some fly-by-night junior or even a very nice, well-pedigreed junior billions of dollars to build one of these mines. So as you say, you're really looking for something that has takeover potential in the copper space most of the time. Now, there are rare exceptions. Sherwood Copper comes to mind as an example of high-grade copper with a nice gold lining there in the Yukon. And that was a small junior that built a small high-grade project, but it was so rich. It was such a cash cow that it delivered for shareholders very nicely before it got taken over in the end. Possible, but a long shot. You really want to look at something that can be taken over, which means, size potential, district potential, political risk low, right? The permittability, the kinds of things that a large company run by bean counters would look for in a project.
Right. Oh yeah, you mentioned large twice. That's what I was kind of wondering. Is like, so that what's
the theme there?
Yeah. Okay, it's scale. Because I was curious. Yeah, what's the
but sorry, let me just jump in. Margin matters. I mean, absolutely, margin is king. People talk about grade is king, and yes, grade is maybe queen. I don't know. Grade helps because it creates margin.
Sure.
At the end of the day, size isn't everything. There are a lot of copper land bank plays out there that I don't think will ever be mines. They're just too low grade.
Interesting. Okay. Yeah. Thank you for that. Now let's go back to uranium. Specifically, one thing you said, I don't know if you said it was opposed or you said, the renewables over here and uranium's going that way or they're going opposite directions. And so I want to pull on that. And I hope you're wrong. And the reason is because I think the nuclear story has been so misunderstood. It's zero carbon emissions, remarkably small footprint for energy output, but yeah, the perception is terrible, right? And for my entire life, it's been this enormously controversial technology, right? On the back of some horrible accidents, right? But not very many compared to, fossil fuel.
Well, and not as bad as the hype. I mean, I don't want to downplay, particularly Chernobyl. I mean, Chernobyl was really bad.
It's really bad. But we don't build those kind of
Island, it started going off the rails with 3 Mile Island. It's funny, you look at the posters for and the marketing for nuclear energy, and there was this dream of this clean, no smog, this clean, high energy density future. It was such a beautiful dream. And just sort of coincidentally, there was a movie, it had to be Hollywood, of course, a movie called The China Syndrome that was out in movie theaters at almost the same time as the 3 Mile Island accident. And just the fear that gripped the United States and the world about nuclear energy, even though, look at 3 Mile Island. In a way, it's a good thing in the sense that, there was an accident. Nobody got hurt. The safety systems worked, right? It was contained. And, Fukushima was a tsunami. It wasn't just like the nuclear power plant decided to blow up and kill a bunch of people or something. There was a tsunami. So, yeah, and it was the tsunami that killed the people. But anyway, Actually, so let me push back on your question. The way I phrased it was that I hope I said it in the past tense. There has been this perception that nuclear is part of the old energy paradigm because it has been around for a while.
Yes.
But there are more and more people on the climate change side who are pro-nuclear, even the new US administration, which is, that's a game changer if there is anything there. But it's not just that. It's more and more actual climate change warriors out there. And not to be disrespectful, but I don't quite buy into that whole thesis. But if I did, and if I believe that we have to really radically reduce our carbon emissions in the next 12 years or we're all going to die, like if I believe that, I'd have to be the most rabid pro-nuclear guy in the world because there's just no way to do that building windmills. We can't do it fast enough. Even if 50 years from now, the windmills and the batteries and the solar panels will mean we don't need nuclear, fine. Mm-hmm. You don't get to 50 years from now, right, without nuclear on the way. Yeah. And on top of that, you've got the small modular designs, much safer designs. I'm particularly keen on the molten salt reactors, where if you walk away from it and it goes, and it melts down, that meltdown actually undoes the core and it stops the reaction. So if you haven't, there's the small modular reactors, SMRs, and then there's the molten salt reactors, MSRs. So it's a little confusing. But the point is that there are great new designs out there that are much less dangerous. And some of them, even like worst case scenario, you literally walk away from it, it turns itself off. It shuts itself down. So you've got this growing need or even perception of need, right? We've got to stop climate change now. If you believe that, there's just no choice but nuclear. So I'm extremely bullish. I got to tell you though, Jay, I mean, in the early aughts, in the early 2000s, there was a nuclear renaissance story going. There was a famous guy, one of the founders of Greenpeace, if I recall, or some, big nature conservancy group like that, turned pro-nuclear, and boy, was he excoriated. But for a while, there was this new look at maybe we should reconsider nuclear. And then Fukushima comes along. Yeah. And so, screeching halt. So I've seen nuclear get more exciting before and then lead to a disappointment. So
interesting.
I am bullish, but my investment thesis as a speculator, right? I'm not counting on this, uranium utopia in the next 10, 20 years. I'm just looking at the fact that you can't mine the stuff for the prices that it gets on the market today. That's got to change. Absent another nuclear accident, if there isn't another big scare, I think that we're going to see much higher uranium prices in the year ahead, 2 years max. And history tells us that when that happens, the uranium stocks go absolutely through the roof. And that's an important part of my portfolio right now, picking the best uranium stocks to capitalize on this near-term opportunity I see in this space.
Interesting. Okay. Yeah, I love that. And to your point, if you're not choosing nuclear, you're not choosing solar, you're choosing coal. That's the option.
Yes.
Right?
Yes.
That's what we have, right? But I'm with you. I get it. So then I have a specific question for you. It looks like the Biden administration is very responsive to nuclear power, it seems. So then let's say they are, maybe I'm making an assumption there, but let's say they are receptive and supportive of nuclear power. Then the question becomes, are they pro-mining? Right? Because are they pro-American uranium, right? Or are they going to rely on the Kazakhs still? And then, it's a second question. Do you have any thoughts on that?
It's not just the Kazakhs. I have to say I'm a uranium bull, and I am pro-nuclear power, not just because as an investor I want uranium prices to go up. As a human being, I am pro-nuclear power. I am pro anything that lowers the cost of living for human beings all around the world. And I think nuclear energy is part of that solution for people. I would rephrase it, it's more like, what are Biden's priorities? He came out, it's not just an assumption, as candidate Biden, he came out as pro-advanced nuclear, and his new energy secretary, Kerry, has said point blank that nuclear is part of the solution. He just gave a talk at MIT and he was telling the engineers there, go for it. There is no other answer. He echoed what I just said right now. So we have the administration saying this, but how will it really stack up in their priorities? Maybe the raising the minimum wage gets them more votes in the near term. It's less controversial in their support base. So who knows? I think that's first and foremost, is how high a priority is. Because if it is a high priority, it answers the other questions. But it is interesting, though, that you bring it up that way, because we have this new review that Biden just initiated on critical minerals. Well, this has to be one of them. The U.S. has almost 20% of its power generated by nuclear reactors, and it produces basically no uranium. Now, let's not get carried away here. It's not just the Kazakhs, right? Our good friends in Canada produce as well, and there's uranium down under too. So it's not like we have no choice but to go to the Russians and their friends. But clearly there is an issue there if you don't produce any of it. Maybe less of an issue if you're not putting new taxes on your trade partners or import duties on your trade partners. So point is, the new administration has launched this review, and that means that it is a priority. I don't know how high, whether it's their top priority, but they, instead of just talking about it as candidates or yakking about it, Biden needs to shoot an executive order, and we'll see what comes out of that. And at some point, it seems like somebody ought to realize that if you're going to have, these rare earths or uranium or anything else that you need, well, it has to come out of the ground. And that means, you can't have a 100% NIMBY attitude on this.
Right. Okay. I love that perspective. Thank you. So I want to wrap it up with some general rules of thumb that I can pull from you now, Lobo, that we could apply to uranium, copper, silver, gold explorers. So we're just talking about the junior mining sector, specifically for anybody who's maybe newer to the sector, but not necessarily, because man, I break rules all the time and I pay for it. So you should hear this stuff on a regular basis. How do you go about, what's the quick and dirty way that you go about exiting 80% of the opportunities from your deal flow, knowing that you're probably going to do that?
You ask me how I triage. I have a whole service called My Take. It's not the main newsletter, which is centered around my own portfolio. I have this other thing called My Take, where I evaluate stocks for clients, and it gets published in the newsletter. And it's all about triage. And part of it is just, I have to say, my own special sauce, Jay, my experience in the years. I start, when somebody sends me a company to look at, the first thing I do is I go to the People tab on the website and I look up management and directors. And if any of them are in my little black book of people who have lied to me or failed in particularly important and spectacular ways for shareholders, then I just stop right there. I don't care how good the rocks are or how interesting the story is, because they'll get messed up by the wrong people. That said, anybody can Google, and if you Google at management and you find a history of lawsuits and shareholder revolts, that's telling you something. Basically, I have my own version of the 9 Ps of resource stock evaluation that my mentor, Doug Casey, taught me when I worked for Casey Research for all those years. And that's available for free online. If you Google Doug Casey 9 Ps, or it used to be 8 and then 7 Ps before that, you can find a free version of that report out there. But to sum this up for people, the important thing is due diligence matters. You can't just throw darts at the board here. There are thousands of these companies out there. Due diligence matters. And one more thing, I'm a speculator, right? I'm not looking for the safest investments, the surest thing, but I'm not a wild gambler. I really, if there's one thing Doug taught me that I would love to pass on to other people out there, is that a successful speculator is not a gambler. A successful speculator is a disciplined person who does look ahead and try to gauge the odds, not just of what's happening now, but what's going to happen. That's what makes it speculative. But you do everything you possibly can to put the odds in your favor. And that's due diligence. That's where the due diligence comes in. So don't be a wild gambler. Don't buy into the storium, right? Look at what's happening. Look at the trends. Look at where they're going, and position yourself and do everything you can to research your opportunities thoroughly and make the best, cautious but optimistic speculations you can.
I love it. Love it. And if you work a 9 to 5 and only have 10 hours a week for your portfolio, find personalities that you trust that spend full time. I mean, you're probably 70 hours a week looking at this, I imagine.
I do this almost 24/7. Ask my wife if she recognizes me.
All right. Look, I'm so glad we can make this happen. Thanks so much for your time. Thanks for coming on and sharing your perspectives with my audience, Lobo. I really appreciate it.
Thank you, Jay. Appreciate it as well.